Good morning and welcome to the Leadership and Insurance podcast. I am your host, Alex Bond. I'm very lucky to be joined by Richard King from Ticker. Good morning, Richard. How are you doing?
Morning, Alex. Very well. Good to see you.
Good, thank you. I always start with the morning ruse because we release it in the morning, but I'm well aware it's the afternoon, in case you think I'm losing my marbles. But look, Richard, you and I know each other, and obviously I know the Ticker business. But it'd be really helpful if you could give us that well-rehearsed, probably investment round elevator pitch of what Ticker does and who the business is.
Done it a few times. Ticker's been live for just over 2.5 years. We're a motor insurer, but we're all about connected motor, which means we're all about telematics. We are an InsurTech. And whilst we are a motor insurer, I would say lift up the lid, and we're a data company. We've got 2 products in the market at the moment. We have a product which is for novice drivers who've been on the road for less than 5 years, and we have a product for van drivers. Growth of the gig economy, 1 in 10 new vehicles on the road is a van, and we're looking to serve that market. So what we've done is we've built an ecosystem. And what we do is we layer on top of that ecosystem on niche offerings. Mm-hmm. So as I said, there are 2 that are live today. There are 2 more which are about to go live. One for low mileage drivers, a pay per mile offering. And then we have an offering for convicted drivers, those who find it difficult to get back into the system, having lost their license or been convicted of driving offences. And then next year, we have a number of other propositions in the pipeline. We have an EV offering, electric vehicles. We have an offering for people who are new to the UK, often treated like a brand new driver, even though they might have had a history of being on the road for 20 years and a clean license. Mm-hmm. And then we'll also have an offering for older drivers over the age of 70.
Awesome. Thank you very much. Yeah, the well-practiced pitch is always really welcome. It's funny because I don't. Even though my business is very simple, I don't think I could summarise it as quickly as people do. I need to get much more.
I've got better at it over the years.
Yeah. Well, I wanted to talk to you about your sort of serial founder status, but I'll get to that in a bit. So there's a couple of things I wanted to pick up on that. You said you're a data company. It's interesting with insurtechs. Would you describe yourself as an insurtech or an insurer that's heavily tech enabled, or is there no difference? And I'm kind of picking on a point which doesn't exist.
I think there's a thin line between the 2 descriptions. Mm-hmm. If you're going to have sustainable growth and profitability, then you've got to get the core fundamentals of insurance right. So underwriting, claims, compliance, having a forensic focus on loss ratio from day one. But the success of the insurtechs, whether you want to call them disruptors or enablers, is really down to data. Mm-hmm. The data that we collect and how we use that data at every stage along the customer journey. Mm-hmm. So, in previous years or decades, your underwriters, your pricing analysts were such important people. Of course, they are still today. Let's not forget that they are absolutely still fundamental. But the people that really are beginning to drive the success of the business are your data scientists. Yeah. Because if you're looking to the future and how you're going to continue to get top line growth, but with an excellent loss ratio performance, then machine learning and AI play a very key part of that growth and that success.
Mm. So I wanted to talk about the tech then. So we're talking about all these data points that we pick up with data science. So you, is there a sort of, I don't know what you would call it, a tag or thing that you get people to put in their cars, or do you go off the phone, or what's the kind of practical steps for it?
I think so. As I was saying a second ago, we're about bringing connected motor to a much wider market, mm-hmm. But we're doing it by providing niche offerings. So you can't go to market with a one product fits all, because the data that you collect from a novice driver, or the feedback that you give to a novice driver, might be very, very different to the information that you give, say, someone like a van driver, because typically a van driver drives for a living.
Yeah.
Teenager is getting on the road for the first time. So I think the key thing is that you've got to bear in mind that we're going for a wide footprint, we're doing it with niche offerings, and in that scenario, we don't really mind how we collect the data.
Right.
First and foremost, we have a data pool or a data lake, and it's filling up all the time. We have algorithms which are designed for the type of person that you are, whether it's a low mileage, whether it's a convicted driver, a van driver, novice driver, etc. How you then collect the data, or where the data comes from, to a degree, we don't mind. So whether you're collecting data from a box, whether you're collecting data from an OBD device, or whether you're collecting data directly from the vehicle, the most important thing is that you are collecting high quality data that can be used both in terms of analyzing behavior, seeing how far how many miles a vehicle is being driven, or if the vehicle is then involved in a crash, because in that situation you want real forensic level of data to understand the immediate events leading up to the crash itself, and then the immediate events straight after. So to give an example, when it's novice drivers and van drivers, we have developed, we're not a telematic manufacturer, let's make that absolutely clear. But we do understand a lot about telematics and connected motor. So we've had a device developed for us, which is about the size of a yo-yo. It sticks to the windscreen, it's self-installable. This is a device that collects all the data that we need. It has a self-powering battery in there. And what we do is we simply use your mobile phone, in that instance, as a transport mechanism to collect the data from the box, and then feed that to our to our servers.
And all of that stuff is coming into, what I'm trying to get to is all of that is kind of from the point of insurance. So you get data of these individuals that are driving, and all of this stuff leads towards kind of better underwriting, one would assume, and better underwriting information. But in terms of kind of the customer, other than just getting a price, motor's an incredibly competitive marketplace. How does that kind of benefit the customer outside of kind of just maybe a better price or more appropriate price, or even accessibility to insurance for some people that are harder to kind of insure in traditional market?
Listen, I think ultimately you have to remind, why is the customer accepting to have their driving monitored? Is because they're going to get a cheaper price. You can't avoid the issue. And what you're trying to do is you're trying to give that better price. You're trying to increase your volume quarter on quarter, but you're doing it in a manner where, even though you are one of the most competitive prices in the market, you've also got an excellent loss ratio performance. And of course, for us, I would say typically the holy grail is to get loss ratio below 60% and even below 55% if you can achieve that. And we're on target to achieve that in our first 3 years of being live, which is typically quite unheard of with most motor insurers, particularly InsurTechs, who are growing volume. So the customer is going to choose you because you are cheaper. But then what you're achieving with connected motor is you are achieving much more engagement than you would ever have with traditional insurance. So if you think about traditional insurance, you buy the policy, and then maybe at the end of the term, you may or may not renew the policy. The only other engagement you would have with the insurer is if there was, unfortunately, a crash and a claim. What you're doing with connected motor is you are building up more of a two-way engagement with the customer. So, for example, if it's a behavior-based product, you're giving them feedback once a week on how they're driving. And you're giving them, if they're driving too fast, you're giving them encouragement to drive in a safer manner. If they are driving well, then you're encouraging them with good feedback, and of course you're going to reward them with an even more attractive renewal price. If it's a mileage-based customer who are literally, someone someone who drives less than 4,000 or 5,000 miles a year, and of course, there's going to be so many more of them in this day and age, post-pandemic and more remote working, home working. You're seeing, a number of people who don't want to pay that upfront, larger bill for insurance. They're going to pay a smaller upfront bill, and they're literally going to pay per mile. In that situation, they want to be able to go to the app, and they want to see that the data is accurate. They want to see that where were, a list of the journeys that I've had, and where was the start point and where was the end point. So they're going to check that in the early days of the policy, because they're just going to want to know that you're ensuring that they're paying per month based on how they're driving. They're going to want to ensure that the quality of the data is very good.
Yeah. I was speaking to an InsurTech yesterday that they were saying that it's a similar offering, it's but for mainland Europe, and what they had, they were getting customers through these comparison sites, and the first thing was they were getting a phone call just to check there was actually a human being on the end of the phone, because they were like, the price is good, but theirs was a branding issue. They were like, no one's ever heard of us, so they just wanted to check there was going to be someone there, so if they made a claim, then it was going to be a real thing.
And that's where things like Trustpilot and FIFO become so critical to companies. Like, yes, of course, that there are, Ticker is not a household name, yet when they go and people can get the price and we're appearing top of screen so frequently, there is going to be that feeling of is this right? Is this true? Is this too good to be true? So that's where your customer feedback and your shop window of Trustpilot becomes absolutely vital to you.
Mm-hmm. Yeah, it's an interesting dynamic that we've not. Yeah, it's a sort of modern business dilemma, isn't it? Having to worry about not just the business, but the kind of the ways people can feedback, and being aware of Trustpilot reviews, Google reviews, all of those sorts of things. It's a whole kind of function that just didn't exist, I don't know, 10 decades ago, I would say. I wanted to ask you about, we touched on it there, sort of lockdown. I mean, you launched at a pretty tricky time. Did you, approaching that launch time, was there any consideration of changing strategy as a result of what happened? Did you have to change strategy? How did it impact you, and how did you kind of resolve through it?
No question, it was a hiccup because startup is hard enough, but within 12 months to be entering a pandemic was let's say not the best timing. We were fine. We'd raised an awful lot of money at our seed stage. If you've been here before, and I have been here before, the one thing you always teach yourself is raise more than you think you need. And we had raised quite a lot of money at the seed stage. We'd seen that volumes had picked up very quickly because, as you indicated at the beginning, this is not the first time I've done this sort of thing. Mm-hmm. So we started getting traction very early on in the business. What we then did was, because we had that traction, right in the heart of the pandemic, we went into our Series A. Now, fortunate enough that there was enough, that there'd been enough traction, and we were able to show enough traction across the whole business that we then had very good support for our Series A with our existing VC maintaining their position, and a new VC coming on board as well. So yeah, we were, I wouldn't say we sailed through it, but we were certainly one of the luckier ones. It then meant that what we could actually focus our attention on were the people within the business, mm-hmm. and making sure that we looked after them. And of course, like all businesses, it created new ways of working, or it accelerated new ways of working that were probably going to happen anyway.
Yeah, no, I completely agree. It's kind of, it's just brought the inevitable conclusion of how we work forward a little bit. Just going back to the kind of business and the setup, you set up as an MGA, one imagines. Is there the full stack ambition? Would that be the longer term goal? Well, I suppose that's we'll start with that. I won't extrapolate.
Yes, we are an MGA, and yes, of course, we are building out our full stack. And yes, of course, now that we're seeing that we're getting the underwriting results that we set ourselves, I said a second ago, we set ourselves a very aggressive target. Sure. To be producing underwriting profits within the first 3 years. We're on target to do that. And so what we're now looking at is that we're going to start building in some of our own capacity within that stack. Yeah, I mean, I think it's you look at the trends across all insurtechs. It's what they're doing. I think the most important thing is that not unusually all of the expertise sits within the business. I've owned a connected motor insurer or created one in the past, and we weren't in control of the capacity. We were relying on a panel of underwriters, and whatever you were learning about the data was never ultimately feeding down to the underwriters or pricing analysts within your partners. So it was absolutely essential from day one that pricing expertise sat within the business. I look at it now, we've only been live for, as I said, just 2.5 years. We have probably over 20 pricing experts that sit within the business, pricing analysts and data scientists. And they are amongst the most valuable people in the business. That we can, everything that we are learning about the data is constantly being used as a constant feedback loop into pricing, underwriting, claims, and every aspect of the business. And that's why these insurtechs are proving to be so successful.
Yeah, although it's interesting because I definitely think you're not alone, but there's a tendency to away from the business fundamentals of some of these things. In that, it's almost. I made a bad joke last night within InsurTech saying that where they were going wrong was that they were trying to make underwriting profit. And having seen what we've seen in the news lately, I mean, I don't know if that's the objective anymore. I think it's just. Do you? I mean, joking aside, do you think that comes from being someone that's been in the industry for a long time, but also kind of a serial founder, or is it just? It's particularly in the UK, we focus on really good fundamentals. Let's get the insurtech up and running, and let's get it making money, and then go for the valuations. Where there's a different kind of emphasis in the US, where they go for size and scale, and then almost kind of go for that market capture, and then try and make money out of it secondly. So it sort of seems to be two different attitudes towards it.
It's Alex, you're right. You're saying when you've been here before. I mean, I've been in and around motor insurance for probably 30 years now, and of course, when you've been in it for that long, you witness all the trends that tend to happen within the industry, and then you are more prepared for understanding. And again, I said it a few moments ago about how do you establish something that is ultimately going to have long-term sustainable profitability. So you have to get the fund. You have to pay a lot of importance to the what I call the insurance traditions of underwriting, compliance, and claims, and having that forensic focus on loss ratio from day one, and combine them with the digital exuberance that will exist in the business. And I think one of the things that I don't think we're alone in having done this, but one of the things that we did that was so important to us was how we structured the board for how you grow a digital enabler or disruptor. So if you look at our board today, yes, of course, there is the entrepreneurial exuberance that you expect to see in a business like this. And of course, you've got the VCs who sit on the board as well. But what we've done is we've combined that with, I'm putting it bluntly, combined it with the grey hairs. So we've got a couple of people on our board who have been in and around motor insurance for decades. And in the case of two of our non-execs, Steve Broughton and Adrian Brown, they have served as CEOs of some of the biggest general insurers across Europe. So, and I think having that juxtaposition of the digital expertise, the insurtech expertise, and that exuberance to go and, win all the, to have that high level of growth, but then combine it with some individuals who have seen every possible trend in the last few decades. I think that's, in our case, has served us very, very well.
Yeah, I couldn't agree more. I mean, we had Adam Blumenkrantz on from NFP Ventures, and we were talking about good teams. And one of the things we both, Adam and I bonded over this was the frustration of, it got a bit boring hearing this insurance is broken, and people don't know anything, and you were going, well, they obviously do, and the absurdity, but it's using tech to enable us to do it better and adding value, but then embracing the knowledge and skill set of a really high, successful team that have been there, seen it, done it over, decades.
But don't get me wrong. I think it's essential that you have people coming into the industry from outside of the industry, and that they have these objectives to knock down walls and break through the red tape. I was that person 15, 20 years ago.
Mm-hmm.
And I always remember someone subsequently saying to me, I'd sat in front of a major CEO of one of the biggest insurers in the UK. And I told him about, the things that we were going to do and the ambitions that we had. And he, many years later, said, you said so many naive things in that presentation that day. He said, but the point was that there was also a lot of good things that you were bringing. And he said, that's why we put aside the naive comments. I thought, yeah, good luck with that. Lost for a reason. He said, but because you were bringing just fresh energy into the business. And yeah, a lot of things that we wanted to achieve with that previous business, we did. So yeah, I massively embrace the people coming into the industry with this fresh energy and these ideas. They're not going to achieve all of them. Insurance has changed very gradually over a long period of time for a reason. It can be quite, at its fundamentals, it can be quite difficult. But yeah, you need the fresh energy. I love it.
Yeah, I think that's right. And the whole, it's something about just insurance needs to not be precious, and occasionally some of the kind of the comments need to be more measured, but it's the melting pot of the experience and the new ideas and the new energy that we need. I wanted to talk to you about Abakai. There was announced partnership. Wanted to kind of understand, why it made sense as a partnership, and then just talk more broadly on the importance of partnerships in your environment and what makes a good one for you.
Yeah, I mean, so we've been building out Ticker, we've been building out our MGA, and we've been building high levels of pricing sophistication. And we're at the early stages of machine learning and AI. I then read the press release about Abakai that came from nowhere, of course, led by Mark Wilson, ex-Aviva, and his co-founder, Jamie Hay. I mean, both of them very, very impressive people with a terrific track record of success. When you look at something like that, you think, oh, well, I'm either going to compete with them, and that's going to be a battle, or actually, could we deliver a greater level of shareholder return if we worked together? Yeah. And that's when we met with Jamie and then Mark. There was a lot of common ground, and we decided to work with each other. They're going to be providing capacity to us. I think they're also going to be adding to our pricing excellence. And as I've said on a few occasions, we're going to measure our success in the future one of the ways that we're going to measure our success is because our data scientists are running around the office with a big smile on their face. Yeah. Because machine learning and AI are having such a big impact on the successful growth of our businesses. Mm-hmm.
Well, that brings me on smiles on faces of the employees. I wanted to talk to you about that. So I wanted to talk to you about, you've been writing some interesting stuff about work-life balance, and things that are kind of related to the employee experience of your team. But I wanted to ask you, before I do that, do you live those values? Because you're a serial founder, sort of serial glutton for punishment. But then you seem to be, you and I have engaged a few times and always seem fairly relaxed. I don't know whether you're just doing a really good impression of being like, calm and in control, or, is that something that is that your natural style? Is it something because you've been here before that you kind of a bit more comfortable? Are you taking those work-life balance kind of writings to heart yourself, do you think?
I think if you were to go back to the earlier part of my career, and yeah, I've been very lucky. I've had two very successful exits, and this one is definitely going in the right direction. Mm-hmm. And I think if you were to go right back to when I started being in a sort of a C-suite position, which was in my late 20s, yeah, I would often go to DEFCON 5 a bit too quickly. Mm-hmm. And I think as you mature and you become more and more comfortable in your own skin, and you also then begin to learn that you can actually get the most out of people by not making them I would say I'd never ever made anyone feel intimidated, but people might feel that they might have been treading on eggshells around me. No, I mean, my own style, my own persona has evolved dramatically. I think does with anyone with a bit of, but I'm not that old, you know, I'm in my early 50s. Let's just get this right. But yeah, I think with Ticker, I've had the opportunity to sit back, and with this one, not only absolutely focus on the successful growth of the business and delivering a shareholder return, but I think I've used this one also as an opportunity to focus on people, their development, the culture and the vibe, more so than I've ever done with any other business. I also think you're in a day and age where you have to attract the best people in the market. It's a given that you have to create a very good culture and environment to work in. You've got to create a good work-life balance. But I also think that whilst the pandemic and all businesses having to immediately remote work gave challenges, it also accelerated opportunities, no question about it. And it made, you know, every good business just ended up focusing. So, you know, most good businesses focus on people. You just ended up focusing even more on the people. And there are a number of things that we did which have proved to be really, really successful.
What did you implement? And yeah, I'm intrigued about that, because I think the employee experience is something that it's quite hard for startups, because there's that balance between, you know, you are a bit stretched, resources are a bit thinner, you might have to wear multiple hats. That's quite a good, you know, but I think the benefit of you being a multiple founder and having successful exits is also kind of an understanding that to some of your team, it's still a job. You know, they're never going to care about it as much as the founding team or the people that own the business. So do you think you've got a bit more of a balanced view of what's the expectations of the team? Is that something that's changed?
Well, why don't I give you some real examples of what we did? What I thought was important was the minute the whole world had to go into remote working, you lost that ability for people to just physically see each other every morning. And, you know, the sort of things, people would get in, they're going to the kitchen to get their morning coffee. So I thought, we'll start doing a daily call every single morning. We do it at 9:30. I thought it would last for 6 weeks until we were out of the pandemic or the lockdowns. And here we are 2 years later, that I still do this call every single morning. And what we do is we come together, we physically get to see each other, and I give a brief update on various areas of the business. It might be where we are from some developments, product developments, where we are with our financial numbers, where we are with customer service, or just talking about people or things that I'm up to that week. So I found that was a really good. I found it hard at the beginning, thinking, what am I going to talk about this morning? And doing it every single day. And say 2 years later, I still do it every single day. And I found what's good about that is typically the CEO would bring everyone together could be every month or every 6 to 8 weeks, to say, right, let's give you an update on everything that's happening. I drip feed it every single day. Mm-hmm. So people really get to feel the vibe and the culture of how Ticker is developing. What we then looked at is okay, so what's one of the downsides of this remote working? It's onboarding new people. And it's particularly the difficulty in onboarding people who haven't worked in the insurance industry before. Mm-hmm. So I won't go into it. So many things that we did, but we completely revisited our whole onboarding process. We dedicated 3 people on it for about 6 weeks to really, evolve it to where it needed to be. And I think one of the little tactics that we came up with, again, I don't think it's unique. I think a lot of businesses do this, is that when someone new came into the business, we buddied them up with somebody in a completely different department. Because there was always that, I want to ask the silly question, but I'm too embarrassed to do it. But if they were then buddied with somebody from the beginning, they could always ask those embarrassing, stupid questions. I think we then just really focused on the welfare of the people. We brought in a psychologist. If people have ever seen that Sky TV series Billions, and there's always this woman called Wendy, hedge fund guys, but who was about to make or lose their next billion. We're not in that scenario, but what did we brought in our version of Wendy, and she would talk to the company, she would talk to the group, she would then speak to the exec to teach the exec about how to get through this. And if we observed someone was going into a bit of a dark hole, and of course there were many people that happened to across all walks of life, but particularly when you've got real deep thinkers, engineers or data scientists, sometimes their thoughts can lead the wrong way. So we made a psychologist available to them as well on a confidential one-to-one basis. I think the benefit that you have in InsurTech as well is if you've structured the business right, every single person in your company is a shareholder. Yeah. And when you're in that scenario and the business is growing so quickly and the value of the business is increasing so quickly, it is a fantastic way to keep people in the business and keep them vested in the whole culture and what's happening. So we recently realized, we had a look at our engineers, our developers. We've never lost a single engineer. Every single engineer we've ever recruited since day one is still with us today. And I think there's a number of factors that contribute to that, but I also think being the way that we've looked after people, the way that we focused on them. And and Alex, you may have seen we've reached the finals of the Great British Wellbeing Awards. Reached the final for all the things that we did about this. We documented it quite a bit, and we'll find out in a couple of months if we won. But we're alongside big names like Investec, Warner Music, Bank of England, Royal Mail, for all the things that they did to look after their people. So we did it because it was the right thing to do. It wasn't till sort of stepping back in hindsight, speaking to other people, entering all, thinking, actually, we did a pretty good job during that period.
Yeah, no, it sounds like it. I'm particularly interested in the psychologist thing. One, because I love Billions and I'd love my own Wendy. I think on a daily basis I could probably do that. But in fact, I might trouble you after this to see if I can get them on, because I think that's a fascinating facet of one of the things that comes up time and time again when I talk to venture capital firms and investors of any description, is that we talk about money. We always talk about people raising money, and then my argument is always, and obviously I've got a sort of very vested interest in this is my world, and when we talk about money, we talk about an abstract way, but most of the time, even when we're saying we're going to spend it on engineering, we can spend it on marketing, spend it on data science, actually what we mean is we're going to hire people to do these things. So it's all about people, and most businesses are fundamentally just the sum of the quality of the people. And the old adage is, if you get an A-grade team with a B-grade product, there's still going to be, an A-grade product and a B-grade team. And I think it's been having that microscope of the pandemic where we looked at the people that were in our business and thought how lucky we were to have them and how much we need to keep them. There's been very envious glances at your business that you haven't lost an engineer in 2 years, because that's quite that's quite something. But look, Richard, I won't overstay my welcome. You've been very, very generous with your time, so I wanted to thank you for being a guest. This one's been something I've been looking forward to doing, so thank you very much for being a guest on the podcast.
Well, Alex, you're very, very welcome, and thank you for the opportunity to chat to you today.
Awesome, thanks a lot.